Good morning. Happy Father's Day to everyone. Date 6/18/2011, Saturday morning at 8:42 a.m. Pacific Standard Time. Once again, we're going to take a look at the Dow Jones. What the MMT students are learning today is that how Dow's had a 2-month reversal, but how Goldman had let it down in advance, forward looking, before you had your big pullback here in the Dow for 6 weeks in a row. Go to the stockmarketfunding.com homepage, go to the indexes, and go look at the analysis from 425 on and when the correction was going to start before it started, and go through those thoroughly to get your benchmark of proof and truth. It's very important. Truth speaks for itself. A lot of people don't like to deal with it, but we do every day on a compounded basis because it's important for us to know where indexes are going to go and why. Goldman Sachs is the leader. It is also forward-looking as to where the Dow goes all the time. When you go back over here, you can clearly see MMTs, and I did the S&P 500 one. That's the big, long video, and you would apply the same thing to it as here with Goldman. Okay? So Goldman Sachs puts the bottoms in. We put the bottoms in, but Goldman is leading this way, and the Dow leads with it. Then, check it out. When we made the high in Goldman here in 2009, we went into a 1-month, 2-month, 3-month, 4-month reversal down. We had a counter rally. Here's your 60-day counter rally in Goldman, but you failed and you came down lower. That's what short-term oversold markets do. That's the kind of market we're here in right now in 2011. Short-term oversold, you get rallies, they make a lower low, and this is part of your trend training management, is for you to be totally coherent as to what indexes are going to do and why they're going to do it, and taking a leadership that's diversified financially around the world, just as I said in the S&P 500 one, MMTs. We let it here, and we called the top over here, and you're at your 10-month moving average here. Now, let's take a look at what that 10-month moving average is on the Dow. Okay? Can get my mouse to work here. This is it. 12,876. Right here, we called the top. Go to stock market funding, get a reality check. Get a reality check. Reversal to the 10-month. Get a reality check. Lots of money's been made shorting the top of the market. Reality check. Reality check is this led the way first, broke below its monthly moving averages, then the Dow caught up to it, and it's at support at the 10-month moving average, just as one time Goldman was over here before it sold through it. Now, understanding that we continued to have a 1, 2, 3, 4-month burn. And when we got into 2011, we were still breaking higher highs over here to this reversal in the midpoint of the year. When Goldman was already in the reversal, this was the lag effect. It was finally catching up and putting its all-time highs in. But this had led the way down first. And we used the same very model back over here in 2008 when we were extremely bullish and calling that long-term 20. So far it's been 9 actual quarters of good earnings. And Goldman had some really good earnings. They were making boatloads of money, man, over here. And the thing about it is that they led that market first, and this just has followed it. And just like I said in video 1, and we'll be doing a lot more work on it, is how you can compare during where the market has been in a 6-week reversal pattern as to when you get a short cover bounce rally from being short-term oversold. Just remember that even the Dow right here is still overbought. So we need to understand, when I looked at the S&P 500 over here, we're about the same overbought levels. Here we are. I'm sorry, there was a couple of things I was looking at here on the Dow Jones. And one of the things that we're going to look on the Dow Jones is that the Dow Jones has pulled back and it lagged. Goldman ran front. Then this has caught up to the 10-month moving average. One of the things I will tell you is if Goldman breaks the support line here, your Dow has a long way to come down and test its bullish monthly moving averages down here. Okay? One thing that we need to understand here today is the main lesson for the MMTs is when the Dow had its 2-month correction over here, Goldman had led this longer monthly correction down with the 2-month oversold counter rally, made the all-time slightly a high that was lower than its all-time high over here, okay? And its 2011 high is lower than the 2010 high. That's okay. The thing about it is when Goldman puts its bottom consolidation in over here in 2010, you get the same consolidation here. And when Goldman started to break higher, we had a much longer, broader base breakout. Goldman put the reversal in there, and we kept breaking. There's a 90-day lag effect, 60 trading days, a quarter. We put the high in. That's that reversal. That's on stockmarketfunding.com. Rallies are going to have counter rallies. Rallies need to be sold short into rallies, MMTs. Okay? So when we do get a counter rally on good news up in the market because of the depth of the downtrend, if Goldman breaks that support level, it will be 100% confirmation of that trade management MMT. Off video, as we're in our live market settings, we'll be talking a lot more in depth as we have this morning. Refer to the S&P 500 Father's Day special video and Goldman as well. They're identical. So Goldman led the way before the Dow dropped. How nice. Now, short term, we're oversold because we are. And on any trend cycle pullback, there is a mathematical equation that the platform deciphers for us at SMF that guides us through there. What a nice GPS system that is. Really is a nice GPS system. And that is a guidance. And this is your guidance here. And learning what this will be at when Goldman makes a bottom and does the opposite, then indexes will go. So both long cycle and bear cycles. And how the leader makes its move first and then the Dow follows. Just like the S&P 500 Father's Day special video analysis. I will tell everyone now that moving forward, that the counter rally, and I'm going to say it one last time, a counter rally here is a counter rally here. However, there is a lot of things in turmoil going around. We got Greece, Portugal, Ireland, and a whole lot of stuff there. Then we have the U.S. debt and its problems and policy decision makings going on there. Then we have emerging markets that have overheated in those categories there. And those emerging markets had pulled back before U.S. markets. Just as emerging markets had peaked in their growth cycle, and then the U.S. was a lagger, and eventually it peaked too in the last quarterly earnings. There will be an earnings contraction in the July quarterly earnings season 2011. Another thing that MMTs are going to learn is how do markets price in that environment before that environment gets to be publicly known, and or the people that may still be in denial about growth and the things that are happening in the world today. Well, it'll come clear to them. Market will make sure of that. I promise you, the market will make it come clear to you. And the thing about it is, either you let the market make it clear to you, that's the one you don't want, or you let SMF make it clear to you before the fact. Okay? And if you have a problem with that track record and you want to come out of that denial phase, then go back and take a look at the Dow analysis for the calendar year of 2011. It's all right there, and it was done live in the marketplace. And it told you why we were going to go down. I told you why. We did a lot of work. with our MMT students. Masters of the markets they're going to be one day. Right now they're in their yearly apprenticeship. And on Father's Day weekend, they're learning about what the trade management is like as they've been involved in it on a daily compounded level. But now we got to sit back and figure out, as we were doing that, and they're part of all these wonderful things at SMF, is this is the one that did it first, and then this one lagged it. Just as this was put in the high end, when Goldman put its high in, this was still breaking out, and there was a lag effect, that's all. And then it caught up. It hasn't caught up totally, but knowing it would go here when we called the market top, that it would follow Goldman, and that's the bottom end of the story, here and now, on 6/18 of 2011. So public indicators is what my MMTs are taught so that they can understand how the public makes their decisions, and then how they make decisions are quite different. And their decision processes are made before these events occur. And otherwise, it doesn't do you any good. And if that is what you're looking for, then you should turn this video off right now and move on to that stuff versus this. Let that be known. One of the characteristics will be, once again, short-term bounces, monthly overbought levels versus what? A weekly level. And what could a weekly level be? Short-term bounces happen in trend cycles, MMTs. So if we're going to not sell through that 10-month moving average, this is where the support is. I'm going to draw a line on a Dow right here. I'm going to draw a trend line, just to kind of let you know. And I'm going to go about half of this monthly bar. I'm going to go right about there. Okay, that's right above the key moving averages, and all of these moving averages, just like Goldman's daily moving averages, well, when you break below them, you sell down, and they go into bear reversals instead of bull rally reversals. And well, the Dow is still in a bull rally reversal to the 10-month moving average. However, if we were to print through this in the remaining part, if we don't hold support, and we can't, you can have counter rallies now before they fell again. Like here we had a 3-month rally. We came right back down and tested the lows here. That was in 2010. But it doesn't matter. It was a 3-month counter rally that fell. And this rally here is at support level. If we sell through it, we're going to come down into levels down. Here's 11,500 on the Dow. Of course, we use our platform and get our numbers from there. Okay? So the thing about it is we can see where support 1, support 2 is going to be, but down here, if Goldman breaks that support line, you're going to come down into these moving averages in here. Right here. These moving averages right here. Just like you broke those moving averages, and that was forward looking, that's where the underlying support is. Right now, you're going to get a resolution out of Greece, and you're going to get a counter rally because we're short-term oversold. But just remember, down here is where the market can go. We've already done it here. With contraction in earnings coming, and the pessimistic levels are very high, the bull, which was very exuberant through this period, has turned pessimistic, and the bears now are leading the way. The bears are leading the way. And we want to make sure that that's an important reality that you understand, is that when that bear sentiment, that short market interest, the shorts kind of get piled up there. In the last 2 weeks, they've been coming back into the market. They never start up at the high because they were still bull. Remember that. They didn't get bearish until most of the downside has already happened. They always get bearish down here, but they weren't bearish in here. And nor were they bearish in here at all. And it wasn't until the last couple of weeks that the short interest has gone higher. And that short-term rallies or short-term bounces in the summer period simply happen when this could hold that support, but if Goldman breaks that support line, no, it's not. I will tell you that counter rallies, monthly, weekly, daily, 3-minute period, 15-minute period, 60-minute period, it doesn't matter, is that the upper side is to be sold short, even with Goldman, yes, the market in its current cycle pattern, the bull will argue and let them stay bull. They stay bull, let them stay it that way. The reality is that the way they're pricing the multiple of the earnings and whatnot, we're not at the higher end with the lower GDP between 1.8% at the low end and let's say 2.4% at the higher end during this slowdown period, because QE2 is going to be announced by Bernanke next week, and they're supposed to be coming off of that. But guess what? If the growth contraction continues to continue without hiring people in the U.S. and turning everything around, I'm not going to go into all of that. That's what MMTs, that's what the school does for them, though. However, I can tell you one thing, that the S&P 500 has a pricing model down here right around, let's say, 11,200, 11,100. We could take a look at the public indicators that lay below the floor there, and we can see that where some of these key moving averages are down here. As far as what the public goes, the 100-month moving average is 10,800. Okay, the 50-month is 11,007 now, and then the 40-month moving average is at 10,434. As currently, you would take a look at the 10-month moving average on the public model of 11,831. That's that blue line there. Okay, and let us not forget that the 20-month moving average is at 11,086. That's this red line right there. And how do you get there is generally, mathematically, it will tell us moving in the next couple of weeks on a daily compounded basis, is are we going to get that volatility news that hits the market by Sunday night, by the end of Father's Day weekend here, and then all of a sudden they got this big resolution to the debt. It's a temporary solution. It started 2 years ago, and it's finally caught up to its cycles. Manipulation, as far as I'm concerned, a lot of lies and distortion, and everything under those categories you don't want to be involved in. The bottom line is, here and now, that if Goldman Sachs breaks the trend line, you will sell through that 10-month moving average. When we get into the July quarterly earnings season in 211, you will start to see a contraction in the U.S. earnings as emerging markets had peaked months ago and lagged U.S. markets. Okay? Goldman didn't lag it at all. No, it did not. When we look around the world and where their peaks were and things that they were doing, Goldman was right on the money. Started reversing right away in 2011. Dow didn't follow it because the Dow, you know, these things have lagging effects. But let's get back to those earnings. Again, the earnings have peaked with the lower GDP and a lower contraction level, which is okay for markets. However, the U.S. has a big burden on itself right now, and if they can't come to the right resolutions, you're going to come down here. You will. Over the next 2013, I could see the Dow back down here at 9,500 where it started, right at the 200-month moving average. You'd have to go into a monthly sell signal here. If Goldman goes into a monthly sell signal over here, as it's in right now, Goldman Sachs minus 1.17. The month is not closed. It's not final. However, MMTs will be watching the daily and the weekly, and even the shorter term guidance is on the using the 60-minute trading session and price action between buyers and sellers to have the forward looking as to what the daily is going to end up at the day. But nonetheless, any counter rallies up will be short into resistance. Just like Goldman, it will have a counter rally and it will sell into its resistance levels now. It's going to take some real doing here. When you take a look at this Goldman chart, look at the amount of months. 1, 2, 3, 4, 5, 6. All 6 months are down, man, in 2011. Goldman Sachs is a capital leader around the world, globally and interconnected, and what we call the new 21st century is to be what, my friends? I can tell you, an international platform. That's when things really change. And worldwide capital society levels of different people and different levels within that capitalism structure internationally will change in their behavior patterns. Life changes as we once knew the way that it was. And that the other thing of it is, why would the Dow come all the way back down here? Well, if the U.S. can't do anything about its growth problem without stimulating it now. And the only way that you can do that is it can't be with high taxes. We know it. We know that part of it. The other part that we need to be very vocal on is the fact that we got to promote that money from emerging markets into U.S. coffers and U.S. publicly traded companies. We know that that has to be done. That is going to be a failure if this is not done. Productivity in U.S. needs to change. We need to change the productivity level to get the employment level and to get people back to work. And that means from that level and that belief within the U.S. society is that we need many more manufacturing plants going up. Not only that, when that happens, your smaller cap businesses are going to perform well and people will be spending money going out to breakfast and traveling and buying gifts and things like that, and that capitalism would be flowing through the artery correctly in the U.S. society. Okay? But however, Goldman led this way down all year. Go take a look at where emerging markets had peaked. Goldman is a very important barometer, just like it was to the S&P 500. And there are many other capital products out here, trading vehicles, that follow the correlation of knowing when to short and make a lot of money and knowing when you were too overbought. We still remain overbought on the Dow at this current level. Remember, tops, you can bounce back up to certain necklines on certain kinds of news. You can bounce up here. They always do. That's what volatility is designed. That's going to be right about in here. That a full bounce, a counter rally would have to be back to 12,565. And you can look in your weekly SMF platform and get your numbers to the ones I just said, MMTs. And that if we break support, the monthly sell signal, remember the lag effect, but forward looking, this is where we would be coming. I'm going to conclude this. Trade management is to sell into rallies. Understand that headline volatility and solutions are not really solutions, but near-term oversold gratification moves. And that every MMT must understand how to profit from these scenarios that we have put together for you. And using your platform and your skills and everything that you've been taught to do goes into play right now in, guess what, June 18th, 2011, and forward looking to December 31, 2011. How to compare trends before other ones lag, because remember, there's 30 stocks and Goldman's just one, but Goldman's tied everywhere. And Goldman has gone nothing but down for the year. Goldman's going to be a short-term trade intraday now, but if it breaks here, it's going to be a great short because Goldman's going to come down even lower if it breaks it. And if the monthly sell signal increases, maybe this one has a little counter rally like they always do. But why are they going to be sold into resistance? Because that's the side of the trade. You want to be selling what you bought long, and you want to be selling 3 times as much short at the intraday highs and let them roll over and bank some serious Father's Day money. That is the Dow Jones Industrial Average using Goldman Sachs, and it's a special for the MMTs on Father's Day.